everyone here at the Atlanta Tech Village and to the more than, I think, near 1,500 people who have registered to join us online across the country and around the world. Thank you so much for being here. My name is Delicia Hand, and I am the Senior Director of Digital Marketplace at Consumer Reports. And it is my privilege to welcome you to Demo Day for our first ever Fairness by Design Tech Sprint. I want to start with a story. A woman, older, retired, met someone online. They built a relationship over months, earned her trust, and then slowly the person began to teach her things. He taught her how to use sophisticated trading platforms, how to move money through crypto, how to take a lifetime of savings, retirement, the equity she had built, the cushion she'd worked her whole life, and convert it into something faster, less traceable, harder to recover. By the time she realized what was happening, the money was gone. But here's the part that haunts her. In the months that followed, she started hearing from family members, some close, some distant, some living overseas, who'd also been scammed. She doesn't know if it was the same people who engaged her family members. She doesn't know if her data was the doorway. She will never know. And that uncertainty, that not knowing, is its own kind of harm. This story is what and why consumers told us when we asked them over 8 weeks ago that fraud and the data black box were the two problems they most needed us to solve. Because they are not separate problems, they are the same problem. We are living in a data economy that extracts and exploits, but rarely gives back. Companies siphon enormous amounts of personal information, where we buy, where we live, who we love, how we manage our money, etc. And consumers, in engaging in online and digital spaces, have almost no power over what data gets used to make decisions about them, how those decisions are made, or what even happens to that long tail of accounts and records they leave behind. And when that data combines with what's already publicly available, the perfect storm can sometimes form. Scammers don't have to guess anymore. They know who's widowed, they know who's recently retired, who's grieving, who has equity to exploit. Fraud is a symptom, the data economy is the system. So for nearly 90 years, Consumer Reports has tested products after they hit the market. And this work continues, it's important. But the question for consumers today is no longer, which one should I buy? It is, why is this system making some decisions about me? And what can I do about it? We can't answer that question with a rating. We have to answer it in the design of products on the marketplace. So today we're doing something different. We've brought builders, advocates, the consumers themselves who are directly impacted and affected by these problems together in this room. For 2 days, we've journeyed together, not to talk about the issues, but to fix them. So what you'll see in the next 90 minutes is the result of that work. 5 teams, the last 48 hours, working concepts that begin to answer, how do we shift the burden off the consumer and back into the system that should be catching this before consumers get hurt? So I want to bring in someone who's been a real partner to Consumer Reports and to this work. Someone who's been thinking about consumer protection in the digital age longer than most. Craig Newmark is the founder of Craigslist and Craig Newmark Philanthropies, and his investment in fighting fraud, scams, and cyber threats to everyday Americans has helped make work like this sprint possible. Rather than formal remarks, Craig and I are going to do this as a conversation. Craig, welcome, and thanks for being here.
I'm glad to be here.
Thanks so much. So Craig, for folks watching who don't know your story, you started Craigslist as a project that became a global platform. but you spent the last decade plus channeling that into philanthropy, and a lot of it focused on protecting everyday Americans online. What got you into this work?
Um, in Sunday school, I was taught that I should treat people like I want to be treated. So when I first got into a real serious customer service role, I decided I needed to practice what I preach. This was at IBM in Detroit in the 80s, because I am a really old guy. By the way, it's really frightening to see a huge picture of me behind you. Um, so the deal is that I'm just following through with what I believe. Also, there's the notion that, well, what I also learned in Sunday school is I should be my brother's keeper, my sister's keeper. So this means I follow through and try to help out. They also taught me stuff like know when enough is enough, which is why I haven't monetized into the billions. But that's a tangential issue.
Great. So you've been close to this fight for a while. From where you sit today, what is keeping you up at night about fraud and scams in 2026?
Right now, the rise of, let's say, uncontrolled generative AI poses about a bunch of problems. And I'm guessing you guys have already spoken about that. The idea is that in real time, an AI system can speak in the voice of an appearance of someone you know or someone who might be more convincing than they'd be otherwise. A generative AI system might be very conversational in, let's say, idiomatic English, whereas previously the language would be broken. Like right now, if you get an email, sometimes the use of language tells you that something fishy is happening, but that's changing so that if the email or something live on the phone is in idiomatic good English, then you could have a problem and not know it.
That's a really great point. And yes, we have been talking about AI, and some of the solutions that teams have developed are meant to be AI driven, but for good. One of the things that you said before has stayed with me. It's that providers each own a piece of the fraud problem, but no one owns the consumer's experience end to end. Can you talk about this gap and why is it so hard to close?
Well, right now, providers online on the phone system, they all have to do a bit of things, but then other people have other responsibilities, I feel. Right now, also, a number of the providers are doing good work, but don't know how to talk about it. Maybe they smell liability issues. For example, both Google and Apple have done good work on their phone software and their messaging software on our phones, and they can, in fact, do some detection of real time scams, but they don't know how to talk about it, and they don't know how to make that the norm and to be expected. A big problem right now is that between the big guys, ISPs, and other folks doing social media, is that they're doing some work or aren't ready to do some good work, and they need the permission structures to go ahead and do it. They may need to address some liability concerns, and so far that isn't happening. A lot has to do with institutional rigidity and oh, potentially, like I mentioned, potential liability concerns that I don't really understand because I'm not a lawyer, even though I look like one.
Well, let's flip the lens for a minute. So, after all of this, AI-enabled scams, the fragmented response, the way in which providers could be closing the gap, the scale of the harm, what gives you hope? What do you see that's actually working?
Okay. The people that I speak to using back channels, ad providers of all sorts, they want to do the job for real. They have really good intentions. They need permission from their management, from the lawyers, and they broadly need a permission structure, which seems like it's okay to do that. A big part of the solution, I think, will be consumer reports. We need to use our collective voice effectively. My deal is that this requires like social skills, and I'm a nerd. I'm poorly socialized, but I've had some success in outsourcing my social skills to places like Consumer Reports, the Aspen Institute, maybe AARP, and I'm guessing that people I work with can do the job on my behalf much better than I could.
Thank you. We love partnering with nerds. So I want to open this up for a moment. We have folks here in the room and loads of you online to see if anyone has a question for you, Craig. So we'll just pause for a second to see if there are questions in the room or online. Yeah, Victor. Wait for the mic.
Okay. Hey, as you mentioned, being a fellow nerd myself, how are you able, what do you believe is able for everyday folks who may not be as interested in understanding fraud and AI systems, how are you able to discern or be able to translate that information that everyday people will be able to better understand what is presented and what risks are going to impact them?
Well, what I'm working on is something called Take Nine, specifically pausetake9.org, which is still in an early form, but what it does, it consolidates a lot of good advice regarding fighting scams and also preparing for cyber attacks. As it turns out, what you got to do to protect yourself and your families and your homes against scams is a lot of that overlaps with what you got to do to protect yourself and your job and the country against cyber attacks. The deal is having good authentication practices helps with everything. That's going to mean things like password managers, pass keys, updating your systems, that kind of thing. So the idea is that good advice, we need to consolidate it. We need to keep it up to date, and we need to get very loud. I'm committed to doing that in the very near future. Amira should be careful right now to watch that I'm maintaining good operational security on our campaign, but you will see in the near future that I have no dignity whatsoever, particularly when it comes to building what I hope will be a mass campaign. I can see Amira messaging me, telling me that I'm doing great. I have other material which would be even funnier, but I can't use it yet.
Well, Craig, we look forward to learning more, especially about new material. And thank you so much for joining us today. We're going to shift to the next part of our program, getting closer to the demos. And thank you again for the partnership and being here. So now to help us look towards where we're heading this afternoon, I'm pleased to introduce our keynote. Dr. Nick Supia is the FinTech Program Director and Senior Lecturer at Kennesaw State University and one of the sharpest voices in the country on the intersection of AI, financial systems, and the people they are supposed to serve. In this sprint, he has served as an expert advisor. He will also be a judge, and himself has also run hackathons and events similar to this. I learned yesterday that in one of the recent sprints he organized, a group of high schoolers won over folks in industry. So just sit with that for a minute. How amazing. So he definitely sees what's coming, and he is working with our future, students and youth all over the state, to really think about what's possible in terms of consumer protection. And he's preparing that next generation. So would like to welcome Dr. Nick to hear more. Welcome.
Good afternoon. How y'all doing? Are y'all ready? I know I'm ready, right? I'm having fun here, especially when you're judging. It's a bit different. So thank you for the honor of speaking with you today. This is an important convening around fairness by design playbook and the future of responsible fintech. And I also would like to thank Nat from Alliance of Innovation Regulation. You know, we had a good conversation over the few weeks that, regarding this event. And also Consumer Reports team, Amanda, Delisha, Sierra, Evan, and Johnny. And also Kimberly from Consumer Federation of America. I stand before you as Dr. Nick, FinTech Program Director, and I've got my student there, Ben. He knows me quite well. But also someone whose life has been shaped by hardship, resilience, and stubborn commitment to doing the right thing, even when it's the hardest choice in front of me. So I came to this country back in 1980s as an international student with big dreams and very little money. I was excited, naive, and determined, but I wasn't prepared for how difficult it would be because I didn't have any loans. And I had to work, guys, I had to work 2 to 3 jobs just to put myself through college. And the choice I made was to go to one of the most expensive cities was Dallas. So that's where I landed. I have no idea why. It was either Dallas or Wichita, but I chose Dallas. I experienced homelessness as a student. There were nights where home was a couch or a corner of a room where I could find a spot, and where I was allowed to share for a short while. Some of these friends of anybody that was kind enough to give me a spot, I just laid my head, and did my thing. I worked 2 jobs, maybe 3 jobs sometimes. I remember finishing late shift, studying under the fluorescent lights, empty building. Sometimes they gave me the option of sleeping in the classroom, right, unofficially, and then walking to class the next morning, pretending everything was normal. Those years were painful and at times humiliating, but they were clarifying. When you're cold, hungry, and unsure where you sleep, you see systems differently. You begin to understand how fragile dignity is when people are one bad break away from disaster. You notice how a late fee, a predatory loan, or a confusing contract can turn a difficult situation into an impossible one. And you also learn something about yourself, what you're not willing to compromise, and what you are not. That's a thought I often return to. The people who truly grow through hardship are the ones who simply stay positive or quickly find a silver lining. They are the ones who allow reality to break something honest in them, who sit in the rubble longer than feels uncomfortable or feels comfortable, and then rebuild not bigger but truer. They rebuild with fewer rooms, but stronger walls. That was my story. I did not emerge from hardship with a glossy narrative or endless optimism. I came away with a firm belief that integrity matters more than convenience, and that systems, especially financial systems, must be designed with most vulnerable person in mind, not the most profitable. I came out with fewer illusions, but much stronger convictions. So when we talk about fairness by design, it's not an abstract phrase to me, it is personal. In the 1990s, I navigated banks, payment systems, and credit processors that were not built for someone like me, a foreign student with limited history, limited funds, and no safety net. The tools assumed stability, which I did not have. The fine print assumed knowledge I lacked. When something went wrong, the system default stance was not able to help but to penalize. So I started off in the payments industry in '96 through the help of my 2 dear friends, the Sharmas. Actually, Salila is here with me today. I was flipping pizzas at Domino's. Her husband and her tutored me in SQL, went through the certification process, and they got me started in the payments industry. So I'm really thankful and grateful to both of them for getting me here. I worked through the payments ecosystem, seeing our financial infrastructure from the inside, I watched the evolution from cards to digital, from batch to real-time, from simple transaction to complex data-driven ecosystems. The experience taught me something crucial. The way we design payment systems either cushions people at their most vulnerable moments or quietly amplifies their risk. Technology can scale fairness or harm. Today, I lead the fintech program at Kennesaw State, working with students who are building the next generation of financial technologies. The world they're entering is one of instant payment, digital wallets, embedded finance, and algorithmic decisioning. Technology has changed, the speed has changed, but the risk is the same. If we are not deliberate, our systems again be built for those who are already advantageous and will push and punish people who are standing on the edge. This is why the fairness of design by design playbook is so important. It asks us to embed fairness into every stage of the product life cycle, from the initial idea to prototyping, to deployment, to monitoring. It pushes us to ask different questions. Who is at the greatest risk of being harmed by the product? Where could confusion, opacity, or complexity quietly erode trust and financial well-being? Are we making it easy to do the right thing? Or easy to slip into the wrong one, both the user and for ourselves as providers? In my own journey, resilience was not about being tough for toughness' sake. It was about holding on to core values when everything around me was uncertain. I could have cut corners, guys, you know that. I could have gone down easier, less honest paths. No one could have blamed a homeless, overworked student for taking shortcuts. But something in me refused that the same principle applies to our industry. We operate in a world where cutting corners is tempting, monetizing data in ways that the user does not fully understand, designing user interfaces that nudge people towards more fees and more depth, and prioritizing short-term growth over long-term trust. It can be done quietly. It can be even justified as innovation. But deep down, we know we are moving away from fairness. Resilience in fintech means more than surviving market cycles. It must mean holding on to ethical commitments when there is pressure to abandon them. It must also mean designing products that can withstand scrutiny, not only from regulators, but from perspective of tired, stressed, and overworked consumer who may be one click away from a decision that changes their lives. When I was juggling multiple jobs and classes, what I needed from the financial system was simple: clarity, so I could understand the consequences of my choices, safety, so a small mistake would not spiral into disaster, and respect, so I wasn't treated as a problem to be managed, but a person trying his best. Today, the students I teach and the communities we serve need the same things. Only now we account our system through apps, APIs, and automated decisions. The medium has changed. The human need has not. Fairness by design calls us to go back to human reality. It reminds us that the dark pattern is not just clever UX, it is a failure of responsibility. A poorly disclosed fee is not just revenue, it is a transfer of risk onto people who may least able to bear it. My own story from homelessness and hardship through nearly 3 decades into the payments ecosystem to standing here as the fintech program director reminds me that talent is everywhere, but opportunity is not. There are brilliant minds and hardworking families who never fully participate in our financial system because they have been burned, confused, or excluded. If we design with them at the center, we would just avoid harm, we unlock potential. If we build systems where fairness is not an afterthought, but a design requirement, where the hardest hit user is treated as a primary stakeholder, where we measure success not only in transactions and valuations, but in improved human outcomes, then we will not only have more resilient companies, we will have a more resilient society. I'm deeply grateful to stand here today, a once homeless student, a veteran of the payments ecosystem, now serving as a fintech program director, because it's proved something important. When we create fairer systems, we don't just help people survive, we help them become who they were meant to be. Let us commit together to building the kind of system. Let us choose resilience with integrity, innovations with conscience, and growth with fairness by design. Thank you so much, and have a wonderful day. Thank you so much. Appreciate it.
All right. Thank you so much, Dr. Nick. That was truly inspiring. So I want to take a moment before we move on to thank the people who carried day one with us, our expert advisors who circulated table to table, asked the hard questions, and pressure tested every idea you are about to see. We had Nandini from Consumers International, who hopefully is watching online, Nat Weber from the Alliance for Innovative Regulation, who, in addition to being an advisor in the room and helping the teams, has been a peer partner at the table, helping us really design the sprint, think about the hard questions. Many of you watching have seen air sprints. They do them in the United States and all over the world. And so we're incredibly grateful for your partnership and support. We also want to thank Kimberly Fountain from Consumer Federation of America, also served as an advisor on day one and also earlier today. Also, we want to thank Donna Murphy, former OCC and now with the Claros Group. She served as a regulatory advisor and joined us virtually for regulatory consultations. The team's work and the ideas that you will see shortly benefited as a result of all this engagement. And then there's one more thank you that's probably the most important one. To the consumers who sat at these virtual tables yesterday with each of these teams, shared their lived experiences, and shaped every concept you're about to see, you are the reason that this sprint exists in the first place. So before our teams take the stage, I want to introduce the people who will help us decide what moves forward from today, our judges. And then after that, I'll also walk you through the judging criteria. Well, actually, let's start with the judging criteria. So there are 4 core dimensions that all the teams will be judged on. They are innovation and originality, meaning, is this interesting? Is this new? Is this truly innovative? We're not just reinventing the wheel. Impact and relevance. Will it actually shift an outcome for the consumer? Is it relevant to their day-to-day experience, how they actually manage their finances or online presence? Feasibility within real-world constraints. This is not just an exercise, right? So a third party, an actual consumer, should actually be able to use this, right? So we push teams to think beyond just an interesting and novel idea, but this should be feasible. We should be able to build on some of these great ideas. And last, alignment with fairness by design. Because as we've just heard from Dr. Nick, right, if there are not core consumer-centric principles, then what's the point? And so we also wanted to make sure that the ideas that you're going to see, the solutions you're going to see, are aligned with consumer-centric principles. So I'd like to welcome our judges. We have with us Alexandria Villarreal O'Rourke, CEO of Alumbra, Dr. Nick Supia, who you've just heard from, fintech program director at Kennesaw State, Kevin Phillips, chief risk officer at Pipe and former CFO, CIO, and CTO at Cabbage, and Joseph Val Lovera, director of examinations at the Federal Reserve Bank of Atlanta. Thank you for lending your valued time and your judgment to this experience today. And now I'm going to have you all take a break from me. And to bring this home and cue up the demo, we have our own chief comedy officer and our MC for the demo portion this afternoon. Please welcome Robert Red Daniel.
Thank you. That could have gone very wrong, I'm just saying, but I'm pleased to be here with you all today. Very excited about innovation. For the past 4 years, I've been in an incubator, coach, mentor, and advisor for a lot of startups, so I get the journey. I respect what y'all are about to do. You're going to have a very hard challenge to go through and listen to some of these awesome innovations that come up. So thank you for participating and being part of this journey as well, online and here in the room. Couple things before we get started. Each company or each team is going to have 10 minutes to present and have questions, so that's 5 and 5. I will be ruthless in cutting people off at 5 minutes. A gentle nudge, maybe not ruthless. I don't want any bad consumer reports on myself, so I'll just give a polite nudge, but we want to keep on pace, give everybody an equal opportunity to present their opportunities, and have the judges have a great round of 5-minute questioning. I always like to say this is the yes and part. Just like improv creates a great opportunity for yes and you create better sketches and better improv. Yes and here in innovation creates better, stronger ideas through these questions and better innovative companies as we go on. So treat these as questions that will help you along your journey. With that being said, we want to bring our 5 companies up in order I have. We'll bring you up and I'll introduce you, and then we'll bring you on to the next set of 10 minutes as we go through, and then I will bring on the next company. So our first team, I want you to give a warm round of applause for Canary. And you don't have to jump up. I highly recommend using the steps at the back. Yes, hence why.
Do we have a clicker for the slides? Oh. Thank you. Wait, don't start. All right, we ready, team? Let's do it. Whew. All right. Slow down. I know. This is Dorothy. She's not careless and she is not irrational. She's a retired teacher on a fixed income who gets a phone call that sounds official and urgent. The caller says they're from the Social Security Administration. They know her name, they know her Social Security number, and they tell her that her accounts are going to be frozen unless she acts immediately. So Dorothy does exactly what the scam is designed for her to do. She moves fast. She logs into Cash App and she sends $2,400 somewhere new. Now, because P2P apps treat send like a one-way trip, that money is gone and there is no clear recovery path. That's the problem. These apps make the payment feel simple even when the situation is not. Yes, P2P apps have warnings, but those warnings were built for a narrower use case. These apps aren't just used for paying back friends at brunch. People use them to buy tickets, to book services, to transact with strangers. And so the old signals of a new recipient or a large amount or confirm before sending don't tell us enough. And we can see that because we're still seeing billions lost to payment fraud annually. Most payment complaints involve fraud or scams, and most P2P fraud victims don't get their money back. What's missing is a simple heads up that gives What's missing is a simple heads up before a predictable mistake becomes a bigger problem. And we think this is going to be a huge opportunity because we already accept that kind of help in other situations. Whether we're talking about spell check, seatbelt lights, medication labels, beach flags, these all do the same job. And they work because they give you the sign before the consequence actually happens. Whether your worst case scenario is embarrassment or an awkward follow-up or something more serious, they help people think twice while there's still time.
So imagine if Dorothy, in that particular scenario, had some sort of warning, and that's what our product, Canary, is going to do.
So at the heart of the Canary solution is a payee trust score that uses 7 risk signals, data that's already available behind the firewall of an individual P2P solution. It uses that trust score to model the risk and inform the consumer. The model continuously learns. There's no need for data to be shared across platforms. And then it defines it in simple messages: green, yellow, red. Green is low risk, it's familiar, you can proceed with the payment. Yellow, some risk signals have been flagged. Proceed with caution. Provide your information. Maybe it's an unusually large amount or it's a new sender. Red is an alert that says this is high risk. This could have been flagged for fraud. So proceed with caution. The consumer, though, remains in control. They decide whether the payment moves forward.
Yeah, so Canary swoops in after you enter the transaction information and when you get that confirmation screen up. And what's shown here is exemplifying our goal of scaling the friction with whatever the perceived assessed risk is of the transaction. We have expanded versions of what your screen might be. In the low risk case, you would initially just get that green bar at the top, the transaction information, and we do keep this reminder at the bottom because it's easy for us to forget that these P2P transactions are really hard to reverse once you authorize it to go forward. But then we do, even in the low risk case, provide the opportunity for the user to get some insight into what's going on inside Canary's brain, to click on show me more details on why you chose this to be low risk, and then we expand some of those details. If there's elevated risk, you get a little bit more information at the top, and then you can expand to see more information. In the high risk case, the default is listing out all the details of why we think this is high risk. In each of these higher risk cases, we also recognize that a lot of the users of these apps are small businesses and single vendors where their transactions may appear as higher risk, and there should be a way for them to adjust how they get rated. One way to do that is through a link here on the sender side to update some information to Canary. But overall, all of these, it's the user ultimately makes the decision of whether to go through with the transaction.
So Canary steps in at the point of payment, but prior to consumer harm. The product is inclusive by design. It lives in payment apps already in use by consumers of all ages. It uses universal risk signals that are simple to understand. And consumers maintain control over the money and how it moves, but with greater access to information so that they can make an informed decision. That's Canary. Any questions?
That's awesome. Thank you. This is a little high. Okay, now we're going to get in some, who's going to offer the first question? Awesome.
So I'm very excited because we have a very similar product, but not in this angle. We have a direct-to-consumer scam detector. So would your delivery be essentially directly, you would contract directly with the payments company, would be offered to the consumer? Okay. And so at that red screen where you do find like that higher risk, what information would flow back? Would there be any information flowing back to the company to essentially, you mentioned the model learned from itself. So would they receive kind of indication that the consumer agreed that it was high risk? What kind of feedback do they get?
Here we go. So we had a lot of discussion about the possibility of creating some industry-wide bureau of data. And we thought that was just going to be difficult to try to scale and make happen. So, and we also wanted to keep the data behind the firewall. So I'm envisioning something where the data is behind the firewall. There's an API, and the model is something that we're refining, but we're not taking ownership of the data. So we didn't talk specifically about returning information back to the company, but I assume that we could. Yeah.
I think we've also talked about, right, this is up to the point where they send, and if then later they say, hey, you know, that was a fraudulent transaction, there could also be the opportunity for them to update the P2P app company that, you know, this act, I went through with it, but I wish I hadn't.
Do you see this as a opt-in service for consumers, or is this something that you think would be mandatory, you know, if a company, if a Cash App or a Venmo wants to enable it?
So when we spoke to our first, I'm very loud. When we spoke to our first consumer, the feedback that we got is that the service should not be opt-in. The idea being that it's a fraud prevention tool, and so it's a good thing to have fraud prevention. So as part of the account agreement, you would have the consumer consent to their information being used for fraud detection purposes, and that's pretty standard across the industry anyway.
So, having worked in a digital bank where we would send a pin out and say, we'll never ask for this, don't share it, and yet people do, why will this work to prevent people from doing things that they shouldn't do?
I think like Craig mentioned earlier, it's going to be able to incorporate that pause time because they are still empowered to make the decision to say yay or nay. However, they're a more informed consumer. And so if I am purchasing a washer dryer off of Craigslist from you and you are just firing off all red warning signs, it may give me that hesitancy to choose another provider.
We also want to leave the consumer in control. So the situation could be that they do, in fact, know the person they're sending it to, and somehow the model is inaccurately flagged them. And we want to give them the control to move forward. So it's designed to be information for the consumer that they can use to make an informed decision. If an individual app wanted to actually block the transaction, that's up to that app. This is consumer information.
Great presentation, folks. Is there going to be a subscription for this plan or this program? Have you all put some thought into that?
Well, we would, as Canary, would need to have a way to stay in business. So there would have to be a business case around the payment app producing their fraud and providing service to the customer and then paying us. We didn't talk about how it would be priced to the solution provider.
And we also have a question from the audience.
Mason has a question online. After viewing a yellow or red warning, if I click the send button, will I get one more chance, such as a pop-up, to cancel my transaction?
I think we envision that signal to be the warning to the consumer to think carefully before completing the transaction. So no additional pop-ups would show post the payment, post this initial pop-up screen. The other thing is when we were speaking to one of the consumer consultants that we had access to, they really they thought it was important that the pop-up not be aggressive and not be a hindrance to moving through the platform and submitting the transaction. And so if you add an additional pop-up that says, are you sure? I think that could be problematic from that perspective.
All right, that's all the time we have for our first team. Let's give a warm round of applause for Canary. Thank you very much. If you have additional questions, feel free to grab them at some point in time during the transition, later on during the day. For those online, it's always great to ask questions. I'm sure those will be able to be gotten to the companies. Every question helps along the way as people are building and innovative, so highly recommend them. Next up, we have Glassbox. Give Glassbox a warm round of applause as they come on up.
I want to go here. Go ahead. Okay. Good afternoon. We are Glassbox, and here is our position. We want to help those understand first to decide clearly what users and consumers are signing up for with their data. Now, imagine this. You are Myra here, and you see you're signing up for this data, this budget link app. You really want to help manage your data and manage your finance. And as you see on the agree sign over here to continue, it's going to be a lot. It's overwhelming. It's going to be a data dump, which 74% of people don't even read. Because here's why. You see it is very detailed. Data dump, it can be like 40 pages deep, long of the agreement of what she has going to consent and give her data and information to. So now here's our ability. We want to help translate, separate, show the impact, give control and agency so that people like Myra can organize and have mutual beneficial consent with their data, what they're agreeing to. Now here is our solution, the AI tool. This will help organize. As you see here, there is the identifiers of what is required, what she's identifying her information, the verification, what personalized offers, such as optional, that she does not have to give to, such as, and also, as you see, the rights part, knowing your rights, what agencies she can go to, what data laws, what impacts from states as well as regulatory and federal, and the most important part, how organization, how that business budget link will make money off of her data. Now, as we said here before, you see here you have the accept, the default, it's the data dump. That's what we've generally seen, where it's the long privacy options, but what she's going to consent to. The optional data really is in there, but it's buried. Most people don't even know where it's at. And what we're doing is, from that part, we're showing what is required, what's optional, plain language, granular controls and options, and we're allowing them to decide and allow how it's going to be impacted, what they say yes and no to, and again, how the system and how these organizations, financial institutions will benefit with her data. Now,
let's go back to Myra. So she decided to sign up for a budget link account. Thanks to Glassbox, she feels like she has more visibility and understanding of what she actually agreed to. Myra is also very curious. She wants even more transparency and control of her data. Glassbox has this secondary platform, which you see here, and you can see that she has 2 alerts. There are terms that have changed, and one of those is a privacy policy notice from Budget Link. Here she has a clean view of her consent history and a feature to know her rights and what agencies she can seek support from and information from as it relates to her data sharing. Myra is a visual learner. She customized her view to have a data flow map and see more clearly how her data is captured and where her data goes.
Now, after all of that, Myra, before going into the long data privacy, 40 pages long, overwhelming information, now with the Glassbox information as organized it, now she has the transparency to see what is requested, why. She gets to understand what is optional. She gets to have the agency and control of what she wants to share. And again, understanding how companies make money and profit from her data, which many of us may not always understand. So like with the current app, if it's even an app that doesn't cost her anything, she will now be able to see when she's sharing this data, what these apps and how they're able to identify market, whether it's through research, sharing her data, they're using it for surveys, for data collection. Now she has the ability to see it. And here's the last part here, just some of the studies and data that we've pulled together, such as, again, where 74% of people who read through, they do not fully read the data privacy because, again, generally it takes about at least about 30 minutes to even read through every policy position. And then again, as you can see how visual labels help change and identify, we've seen studies such as with Apple, when they identified and they labeled their privacy data, they were 15 times more likely to identify.
Thank you very much.
Yep.
Dr. Nick, you kicking us off? No? Last. Alessandra.
So I'm a lawyer by trade, and one of the things that is always scary is getting whether the AI is going to get the law wrong, right, or the interpretation of the contract. Obviously, there's laws about if you misrepresent what the contract says, the company that issues the contract can then come after you, right? So what are some of the safeguards that you would put in place to make sure that the way you're interpreting the contract is, correct?
Okay, well, I'll start off for what we're foundationally doing. We'll have our own notice that we are here, we're aggregating the data, we're pulling it from where, the current system and where the app comes from. And as far as the data training with our app that we're utilizing from the AI and the pattern recognition detections from, such as like causal AI and how it's able to more accurately identify and aggregate the data. But our main premise is to help organize and locate. And that's why we have where if you want to go in to see the FTC or consumer reports or CFPB, you have those. We're just sourcing and we're giving them agency to determine what is important that they may want to see in that.
How do you make consumers aware that this is an option? And I think that question is who are you marketing toward? Are you marketing toward the consumer as like a subscription model, or do you market toward a web browser company like a Google to say, hey, we want you to enable this service so that people who are using it can see it? Or do you market it toward a bank or a fintech to embed it in their like terms and conditions when someone signs up for a new account? Who's your target?
Primarily, it's going to be the consumer that will have it. Now, if Google wants to, because, hey, it's going to be a popular app where people can be better informed, they can do so. And then secondarily, if the company decides to provide that notice and information, they can as well. But primarily the consumer.
All right, we're going to go for some questions from the audience. Anybody here? Oh, we got somebody here. Yes, please.
Do the selections change the user experience at all? So if I don't want some aspect of my data to be shared, does it remove it from the app or the website, like that option to even put it in?
From the actual web, from the app, from the budget link app, are you mentioning? No, we are not there. We're informing. If they want to say no, that's when they can click and agree and say no, they don't, they decline. And that's just the option of to inform.
All right. Anyone else? Anyone online? Yep, we got somebody online.
So Rick asks, would Glassbox activate only when you're asked to agree to conditions, or does it collect them, you sign up, and then monitor them periodically for changes?
That goes to the secondary part of what we have in the app is that if you want to go in there and store and further research and investigate, but it is as you're going through the information and inputting your data, it is monitoring and inputting and then get to that final part of the agree sign. And as it's pulling from that agreement letter that it's detailed, then it's also giving you that notice part that what's relevant, what's important, because we're not going to get that until the very end of when you're agreeing finally, and it pulls out the default notice information.
All right. Any additional online questions?
Yeah, Mark has the question, can the software find the means of communication to update privacy settings and give the user easy click buttons?
Can you repeat that one more time?
Sure. The question is from Mark, and it's, can the software find the means of communications to update the settings that you're documenting and create easy click buttons for them to be able to interact with what you're showing the consumer?
If from my understanding is from the being able to find like where the data is coming from, like the notice, the updates from the data, yes, it can. And that's where we were showing as Fabric Teammate how if they want to click in the dashboard system, how the data is being managed, what state laws, what current apps they are signed on to, and the state laws. And as there are updates to the state laws, to the regulation, even what we've seen with CFPB being that part, they'll be able to receive accurate notice as what is required and what is, and then they can go to those organizations. That's the main emphasis, to further find more detail and information out, because they're more so the experts.
And that's time. Thank you. Yes. Give a round of applause for Glassbox.
Yeah, thank you.
That was almost a mic drop. You know, this really interests me because I read absolutely nothing. I think Amanda sent me a 2-page email about, can you help today? I didn't read it. I just said yes. So I wasn't quite sure what I bought into, but I trusted it. So I like this. I'm not going to spend 30 minutes reading things. Okay. Next up, I want to welcome to the stage First Call. Please come on up and give them a warm round of applause.
Hi, everyone. We are here to introduce, we're Group 3, introducing First Call. Oh. Okay, before I introduce you to Maya, I want you to think about, today, is managing fraud based on fairness, or is it based on a workflow checklist? Let's first meet Maya. Maya is someone who saw fraud. She noticed it. She did something about it. She did the things she was supposed to do. She called the merchant. She went and tried to find the right person to call. And still, she was fighting an uphill battle. And what does that mean? She felt no empathy. She did not feel like she was communicated to. And at the end of the day, she 100% felt like it was a slow process and lost money. The clicker. So what does that mean? That means that we're going to have more fraud. She's going to see more, and because fraud is based on managing the speed to actually get the fraudster. Second, we already know that banks are required to manage fraud, and we know that they lose money from it, and we know that they're managing it in a way so that they can go through the workflows that they already have. But we're introducing First Call. And the big things to understand about First Call is that we're not just managing the flow of the checklist, we're bringing together the consumer needs in terms of how do they actually think about the various components of what they need to do, what they need to know, and we're matching that up instantly to what the banks are already doing in their system so that there's equal flow between communication, data, and everyone knows what's happening. So what does that look like? First, we said that it's based on their system. It's flowing into their dashboards. We're providing instant data into that so that the agents, the internal agents that are managing, the specialists, actually know what's coming directly in from the consumer. Second, we're making sure that we're feeding into all of the information that the consumer needs to know into the consumer flow that they're already logging into, that they trust and they know is verified, and telling them that the fraud exists. Third, what actually happens? The consumer today, it's very important that they're putting the information in, but they're also putting information in a seamless way, and they're not going back 50 times. This is where it becomes really important. It's not about the consumer managing the checklist. Yes, it's about transparency. Yes, it's about receiving communication. But they're in an ecosystem to manage their finances in the moment that they're at the highest risk of managing their fraud. They need to know, do I need to freeze my card right now? How do I need to move money? They should not be second guessing what to do in the state of high risk. And we're here as First Call to help them, guide them through that process while also giving that information to the banks. Last, let's say they have a happy path. They just don't want to see credits hitting their account, $1, $10, $20, that you're getting your money back. What they actually want to know is what's the aggregate amount. They are not running a home ledger for their home. They are trying to understand how much money did I lose? Did I get it back? And also, if I have other questions, you're not just moving me off of your tracking log. I can call you, or I can continue the conversation. Inside the bank, it's really important so that the agent or the specialist can actually also see. They can actually communicate, not just to the detective who's doing the investigation, but to the customer in real time. And so having that open flow of communication. We should not feel as though we have to hide the information to the consumer about their personal accounts around the conversations we're having. And it's very important to have that equal mutual conversation. First call. So where we started is putting all of the onus on the customer in terms of managing, advocating for themselves, and tracking. Where we're moving to is, yes, the customer needs to be at the beginning and being in and making sure that they're doing the right reporting and follow-up, but much of that, the bank has a lot of the control. And so it's pushing the right information to have communication, empathy, and speed. And so at the end of the day, managing fraud should be about fairness, not simply about moving through a workflow.
That's a great way to land the plane. Thank you. Beat the clock. You're now my favorites. All right, first question. Kick us off, Kevin.
So from First Call's standpoint, who are you selling this to the community banks, regional banks, or to the consumers?
We're visualizing smaller banks that probably don't have large teams that on the customer service side and on the fraud management side, for whom this could provide an improvement in service. What we found when talking to consumers is their experiences with larger banks where it's actually pretty positive. The banks themselves detected the fraud early on and held their hands through the process. We're more concerned about smaller institutions that don't necessarily have the resources to focus on building up that technology.
So, one of the challenges in scam prevention is that scammers have accounts too, right? And so they sometimes use the tools in order to figure out how the bank is preventing that tactic. So I love the transparency because I do think that a lot of the uncertainty is what creates anxiety, and then some additional bad decisions while people are kind of freaking out, right? But I do worry about letting the scammers too far into the process. So how do you sort of think about preventing that misuse?
Right, absolutely. And we discussed that exactly. And the big piece is that you don't have to tell the customer how you're solving the problem, and specifically how, like, for example, you're using phone data or your GPS location or the details of how you're talking to the merchant. But you can tell them that we are in this process, we will get back to you, and this is what we're like, in terms of we are in the process of investigating, and this is how many hours it will take and will show up. And I think it's about communicating so that they know where you're going in terms of the steps, not necessarily what's happening behind the scenes in terms of how banks are actually analyzing the data or reaching out so that fraudsters can actually learn your process.
Good afternoon, team. How are you all doing? So what guardrails are built into your system to prevent drift into unfair outcomes?
So what First Call is, it integrates the communication touch point, right? So we're not solving for the fraud resolution problem. So we will never be able to guarantee that your claim and your dispute will be solved. What we're doing is we're making sure that instead of you having to call 10, 15 times, or instead of you having to prove all of the information over and over and over, you send that information once, the customer support team gets it, also the fraud specialist teams also get it, and then the information is flowing seamless across all parties. But then it's not up to the solution to figure out if it's going to solve or not.
And I don't know if it was actually visible in any of the slides we had, but in our demo, there's also a lot of opportunities for the consumer to ask further follow-up questions even after their case is resolved. What it, I think, importantly does is even after a case is closed, formally still gives the consumer opportunities to ask follow-up questions and further understand their case. so that they know what's going on to a greater extent, because I think a lot of the issue there can be the opacity of how that process ends and like what it means for that process to end.
I think I would characterize this as how I'm interpreting this as somewhat like a transparent audit trail to the customer. So do you see this as something that the bank can use to support like case investigations or things like that that are happening with these fraud accounts? And then if so, do you think there's any recourse or liability to the bank if they don't follow the process? Is it on them to make sure that they're doing this using first call appropriately? Is there liability there?
Yeah. So today, banks are required to actually have the tracking of their fraud. And so this is why we see their systems internally are more diligent in terms of keeping track, so that if they're ever investigated from the regulators, they actually they provide something. So what you'll see in terms of from a consumer perspective, sometimes the consumer will report the bank if they feel like they're not necessarily following all of the necessary steps to help close the fraud. But this actually is better for the consumer and the banks, because now it's like this is the information that was shared on both sides and they both have access. And so and what we're thinking about is that this is one of the guardrails. These are the ways that we're using communication really for both sides to equally get the value that they need.
And we're at time. Thank you very much. Give a warm round of applause for First Call. I was really hoping we could get more questions because I wanted to say last call for First Call. So that was too easy. But y'all having a good time? Do a quick stretch. Yeah? Wait a minute. Are y'all having a good time? There we go. And I know there's a bunch of woos online. So we want to bring up our next contestants. Please welcome to the stage Vera Vault.
Oh, you need to plug in? Mm-hmm. It's not working. Oh, okay. So, hey, I'm Andrew. I'm a chef in a restaurant close to downtown, really nice restaurant, but my dream was have my own restaurant. And I worked hard for a long time to save some money. And after, like a few years, I saved money, but I'm a businessman. Sorry, I'm a chef, I'm not a businessman. And I forgot to keep cash for my cash flow. And this was just when I was about to open my business. So I ran to some loan platforms. So after some days, I got a call from an agent, and they say, "Oh, Neomar, oh, Andrew." Sorry, guys. Oh, Andrew, I have a really good offer for you. And that was nice, was really good one. And I got the money. And I think I was gotten the money. My name has been scammed. All the money go out, and I get bad credit. My account was suspended, and my dream was down.
You know what? This is a way more common problem than what we think, right? I mean, there's fraud almost everywhere because of no data standards, no encryption, no data audit at all, and no broker validation, and obviously very, very weak regulation. So something like this happened to me as well when I was starting my own startup. And what I did is I did hours and hours of research onto which platform should I go to, which micro-lending platform should I get the loan from, and there were endless options on Play Store, on App Store, right? So what did I do? I finally figured out a way to get rid of all the scam, and that was VeryVault. It's it's borrower's experience reimagined with VeryVault. It gives a list of all the micro lenders in one place. You can pick and choose the best option for yourself. And not just that, when you when you get real-time feedback, which micro lender should you go with, what are the feedbacks given by the customers, which one should you opt, which one should you let go of, and not just that. Here comes the interesting part. So you can choose and pick the information that you want to reveal to these micro lenders. Is it your identity information? Is it your credit profile? Is it your SSN details? Whatever, you can pick and choose. And then this gets verified through a two-factor authentication, which is a PIN that you can generate to secure your data. And not just that, so when you get a call from your micro lender, let's say if it is Moneyline, it gives you a call and it tries to access your data. What do? You share the PIN with them and keep your data secure. So this way, you'll be able to see where all your data has been accessed and who is using that. Now let's get into the technical details of the platform.
So from the technical details, how would we protect the real information from the user? So when the user joined to our app, he put the information they input his information, and he create a PIN. When a lender needs to access that information, the lender requests that PIN, and with the hash the lender have from that PIN, they can combine both and get all the information, not all, part of the information, because this depends on which lender is going with. Next. So talking about the marketing side, for this year, we estimate $123 billion for this micro loan that's not business loans. And this is just talking about US, not talking about the other countries. So how we make money? We are making money from lenders, and also we are trying to make money, or not trying to, but we are offering this app for our customers, where you can make money from a premium platform. The lenders will, okay. No, we don't have time. So this is our estimation, the TAM that we're looking for, the 123 billions, and the SAM, and that's like 5 billion that we're addressing on the beginning. This is our team, and?
So yeah, let's not be an Andrew and sign up to fraud-proof your dreams today. Thank you so much, everyone.
Bonus points for a funny ending there. The chief comedy officer likes it. All right.
Thank you.
Joseph, you're going to start us off.
Yeah, I can ask a question. So I think the self-select of what you disclose to the micro lender is an interesting concept. But I think it's, most of these will have like minimum requirements as to what they're willing to receive in order to underwrite the loan, right? So how would you work with the lenders themselves to understand, what are the minimum expectations for a consumer to be able to toggle up and down what they're willing to share for the micro lender?
You want to go? So the idea is, when you do a PCI information, like you put your credit card on a website, and this is encrypted. So we'll be saving this hash on our database, like encrypted with all this information about the client. And then when the lender they want to access, they will have this hash, and then they have to request for the client. So we can audit this information. We can say, oh, this lender has requested your information this day. So we can keep track of the information, and all the information about the customer will be on our database and be delivered for the lender on the way.
From the lender's perspective, the difference here between Verivault and someone like Lendio or some of these other aggregators is that you're, in effect, verifying, hence the name, that they're a, quote, legitimate lender, so that what happened to Andrew doesn't happen to the small businesses or consumers here.
Yep, that's right.
Sure.
So just adding a few more information as we have time. As the customer will be putting the information on very vault, not on the lender website. All this information is secure, and this can be shared between different lenders. Of course, not with the same hash. Each lender have a different hash, but this can be shared. And like, if can you go to the marketplace? The point like this marketplace is a way we can market these guys, market these lenders, and they say, oh, these guys are vetted by us. So we'll be like this is like a logo or something. Yes, that's the idea.
On the consumer side, you briefly mentioned there's going to be a pro option. What features are included in that pro option?
So with the pro option, so you can choose to, maybe store different amounts of data. You might get access to more intelligence. So what we're using is to say, okay, this is OSINT. So we have an agentic AI that scrolls the web to continuously monitor intelligence about the lenders. So we're offering these premium features. We might also offer things like, how long can you lock in the data? Do you have access to, these sorts of features are some things that we will offer to premium customers.
We've got an anonymous question online that is very to the point. What's in there for the common consumer? Maybe restate what this would solve for Andrew or other consumers like it.
So for Andrew, the problem was that Andrew had multiple apps stored on his phone, and he was sharing all sorts of data with different lenders. Now, with this one very vault, you are literally pledging your data, you're safeguarding your data in this vault, and the vault takes care of everything that goes behind the scenes. So the vault is your guardian angel in some ways, holding on to your data and make sure that you are free from fraud and scams going.
Very quick question, Joseph.
Is it only an application, or are they actually processing payments through the loans or through the app as well?
The first step will be the application, but we want to make like a kind of a protocol that you can integrate over even from the customer. That's the biggest dream, from the customer through the bank, from the people who want to get money, but also this same talking. Oh, can I finish this real quick?
Very quick.
So just finishing. So the idea is we can integrate and all the information from Verivault go from the customer to the bank, and then who is going to give you the money.
Awesome. Give Verivault a warm round of applause. All right. And now we're going to bring up My Data, My Choice. Warm round of applause. What's that? Give them a warm round of applause. Woo.
Nothing yet.
I feel like I need to be on Star Trek and engage. Yeah, it works. No, it doesn't. Or was that Star Wars? Oh, I do like to get some people riffed up about Star Wars versus Star Trek. Well, I did hear a lot of people say they were nerds earlier, so I always like to be like, yeah, Jean-Luc Picard on Star Wars.
No, sorry. Time stopped already?
Yeah. Oh, it's gone. I've been talking. I'm just using your time. You can pay me later. That's okay. No, we're going to start you over again.
Okay.
You ready?
Okay.
Let's rock and roll. And
cool.
Go.
Hello, everyone. We are Team 4. We are My Data, My Choice. And so our problem statement is all around how we can mitigate the data issues that we have as consumers and as users in the data black box. So as in the financial app, we willingly put our information into the app's data, servers and all that, but then we also are unaware of how that data gets transferred into like data brokers and how it spiderwebs into a bunch of different industries. And even if you delete the app or cancel your subscription, it doesn't matter because there's no way to actually get that. It's a one-way street in that sense. So you're dealing with 3 different situations. You can't see who has your data. You can't ask for a copy of it, and you can't get it erased as well. So we go into our users setup. So how it starts, we're all like David, we hit the I agree button. So you either read it or don't read the terms of conditions. And regardless, you have to accept it, right? So then it gets put into this kind of situation.
And when you think about David, many of us, we just spend 3 minutes or so online. But there is a lot of things that is going on. There are desirable features that you benefit from using the app. But again, a lot of things that are unknown to David. For example, in 3 minutes, his searches are logged. And you also have instances where when it comes to using the apps, about over 130 financial transactions are also really being tracked, generating or creating additional features that are then sold to over 4,000 data brokers. And if you think about that, what the market size looks like, so you have over close to 5 billion users, and then in terms of like the revenue that the data brokers are getting every year, over $240 billion. And our solution here is really to create a win-win situation for those developers, and then also people like David. We're not trying to create additional burden, but we're creating a protocol that can be integrated by design. So when we talk about fairness by design, it's integrated into apps like DataFi and other financial apps.
So now we'll move into how this works in real life. So I'd like to walk you through a prototype. So if is able to hear me? So if this is how a customer login screen will look like when our protocol or the framework of my data, my choice gets implemented. And so instead of going through pages of terms and conditions or privacy policies, we just summarize that in a possible 30 seconds and show them what is the data for and what we use this data, what are the data that we're collecting from you, and who owns this data or who else has your data, and can I delete it or can I keep it? So here, this is the screen that the user sees, and the user can choose what he wants, and he gets to the next page where he can see what he's agreeing to, where he has transactional data, fraud and security data, and personalized offers, AI personal features, and partner data sharing. So for example, if I choose partner data sharing, and if I say okay, and I go to the next page, I see, okay, here is what you said yes to, where it says you said yes to account details, fraud and security details, personalized offers are off, and AI personalization is off, but third-party data sharing is on. And you get an option to email a copy of this or download this for the reference, and then I say create my account. So to bring in the aspects of the fairness by design and the transparency and inclusivity or the access to the what happens with your data, we also provide a privacy and data tab in the home screen itself, where the user can click on that and see details about what is your data and what calls you can make, where it clearly says that, okay, the 3 data partners are using your data right now, and you have not turned on any personalized features, and when you scroll down, you have an option to see the view activity logs, which clearly tells you where your data has been shared in the past 30 days, which partner or which data broker has your data right now. And we have an option to download what is the data that you have with the system. And finally, you have an option to delete my account. And this basically brings the control of your data back to the customer, and it makes it easy for the customer to take a decision where his data lies and what happens with his data.
Thank you. Who's going to kick us off with our first question? Dr. Nick?
You're handing me your mic. Okay, good. All right. Great presentation, team.
Thank you.
So my question or concern I have is regulators, we're supposed to keep financial data for 7 years. And how are you guys going to handle that piece, especially trying to delete, which is required by law?
Yeah, so as you see, the financial data, the account and credential data, and the fraud and security data, those are required. So those will be stored, but additional data that we collect from you for personalization or for selling it to data brokers and other data will be something that we are, as a framework, what the fintech company should adopt to ready to give up.
So to very briefly explain how you will track which brokers the company has sold my data to, and then in turn, who they have resold the data to, so that you can have my request to forget me go out there.
So when a financial app comes into the contract with a data broker, they share the data through a CRUD API where they say that, okay, it's a one-way pipeline and they share the data, whatever they have with us, to the data broker. But the same contract can add additional clause that, okay, if I'm able to give data to you, I should also have an option to delete the data from your databases. So when a user makes a right to request, a right to delete, or makes a deletion request, that in turn should basically go and delete those data from those databases.
Yeah, and I'll also I'll add that. So there are two layers here: a layer between the customer, the consumer, and then also DataFi, the financial app, and then the second layer is between that app and then also these data brokers. So to your point, the protocol we're proposing here is going to be integrated in such a way that it tracks how those data points are going to the data broker layers. So it's actually the responsibility when the protocol is integrated by design. So it's going to be tracking what is going to these other sources.
So differentiating like a purchaser of data versus a company that's delivering the service in the supply chain, right? You know, so if you're, if My Data, My Choice is working with fintech that has a sponsor bank, how do you think about getting, you know, the full supply chain on board with this service and agreeing to these types of terms and conditions? That's something that you only deal with the, you know, the direct contract, or do you have to think about the whole supply chain?
Yeah, good question. So that body is really not on us, but is on the, for example, in this case, DataFi. So for example, every app that wants to integrate our protocols already has a process in place for their supply chain. So it's not disrupting the existing supply chain that they have. All we're asking is that they integrate this protocol into the design without really disrupting what they have currently.
Folks, I'm going to combine two questions we got online from Carol and Stan. I think there's some confusion from the consumers online about exactly how this works on their end. And said, how would this work if data sharing is part of the related account agreement? And in short, what if the account will now be closed because of this change?
So if it is part of the network, the agreement, then the customer has a clear transparency to see what are the data brokers that I have integrated with and how that data is shared. Like as I showed you the dashboard, it clearly shows when is the data that is being, what amount of data is being shared and what time it is shared. So that activity logs clearly gives an indication to the customer, I can stop my business with this app. So did that answer the question?
Yes. So I also had that. So right now, the customer does not have any visibility into this second part, right, of where the data is going, who has access. So this brings transparency because the customer now will know what is going on and we're giving the control back to them.
Follow-up to my question was, it sounded like there wouldn't be any kind of, you wouldn't impact the terms and conditions, the contracts that exist already with the...
No, we will not impact the existing terms and conditions. This is basically bringing back the transparency to the customers itself to take the control of the data.
All right, let's give a warm round of applause to My Data, My Choice. Kevin, you made me think that they need to license a song from the great Breakfast Club. Don't you forget about me, forget about you. So you might want to put that on your roadmap. I'm just going to give you that. You don't have to pay me any royalties. I'm not an advisor on this one. Can we give a warm round of applause for these awesome pitches today? A little more. I just want to say thank you for being bold and innovative. I was very impressed. That's a lot of green shoots. I would love to double tap and double down on each one of those pitches. Those were intriguing from my perspective as being a coach, mentor, and advisor, Catalyst, and also being at many a pitch competition. Next up, we're going to have the judges deliberate, and we're also going to have a Zoom poll for a webinar. So please vote online, and that's what we want you to do. Also, thank you, audience, both online and in person, for your great questions. Thank you, judges, for your great questions. Again, that's what I like to call yes and making it happen. Again, thank you for allowing me to be up here. My name, again, is Robert Red Daniel from Stand-Ups and Startups. Come check us out. We produce comedy and improv events, and we also produce corporate workshops and training so that people can find their voice. Everybody has a voice, has something to say. We can just make sure that you do it just a little bit better and be comfortable up here on stage or any stage that you walk into, whether it's a TEDx or talking to Ted on the elevator, getting them to buy your company. So thank you. I'm going to pass the mic back over and get the stairs and let you carry us into the next part of the afternoon.
Thank you so much, Fred. Also, thank you, teams. That was amazing. I want you to know I was in the back advocating for more time for you all. So just so you know. But we had to keep it moving. So as Red mentioned, for those online, now is your time to start voting. While you vote, I want to take a moment to thank the people who made this possible. Our sponsors, the Georgia FinTech Academy, the Alliance for Innovative Regulation, NAFLE, the National Alliance for Financial Literacy, and FinTech Atlanta. Thank you so much for backing this model before we haven't had a proof point. Now we do, and we'll talk to you next month. So to AIR especially, our Sprint partner from day one, Nat, thank you again for building with us. To our judges, thank you. I think you are all now gonna be deliberating while folks are voting. And so I'd like to shift us to the next part of our agenda. But a couple of reflections before we do that. So we just had all 5 demos and a couple of things that stood out. One, every solution started with a moment. So not a category, a product line, the moment that the person realized that something just is askew or not right. And that was really core to our theory of this tech sprint, right? We need to start with the consumer. Yes, there is a process that facilitates financial services, right? But the anchor has to be in the consumer experience. And that's potentially where good or better design can start. Second, the consumer voice is not ancillary, right? So again, really thinking about the experiences of the consumer as a design input. And then third, that fixes aren't impossible. Prior to my recent 4 years at Consumer Reports, I spent 10 years at the Consumer Financial Protection Bureau, and prior years as a consumer advocate. I've been in financial services a very long time. And I've found that when it comes to consumer issues, it's like, oh, this is too complicated. Financial services is too complicated. But we're now in this incredible moment where I can have a chat with a general purpose AI tool and I can create. And I'm not saying that that is the solution to everything, but surely if there was ever a moment to tackle the complex, to tackle the impossible, this is it, right? And so we're really trying to step in to say, you know, in the same way where we may need new standards for the new technologies that are out there, maybe there are new ways of approaching design and what's possible. Right, so we're now going to transition, and I want to introduce our CEO, Phil Radford, who you'll hear from next. He is leading us in the sprint today and our move into really focusing on AI and how it's showing up and impacting the consumer experience. So this is the start of something, not the end of it. And to talk about what comes next for Consumer Reports and what this work makes possible, please welcome our President and CEO, Phil Radford.
Thank you, everybody. And can you hear me okay?
Yes, we can.
Excellent. Great. Well, thank you so much. And a particular thanks to the sponsors, but also to Delicia Hand for her incredible leadership on this project. Before you all find out what the vote tally is, and I'm very excited to learn who got the most votes from the judges and from the participants, I just want to celebrate what just happened in this room and online. 8 weeks ago, more than 800 consumers responded to us to tell us where digital finance is breaking for them or harming them. And through surveys and focus groups, we gathered a broad list of frustrations and narrowed them down to 2 places where the system is failing consumers. The first is when fraud and scams hit, and the second is when people's data is used in ways they just can't see or control. So 2 days ago, 5 teams who came up with incredible names for themselves walked into this room and into this sprint with those problems and a deadline. And what you all saw over these last 2 days was builders and advocates, experts, consumers, all at the same table, working on all these problems that consumers are facing, right? Problems that are causing real harm, problems that are happening right now. This is incredible. It's not normal for this kind of collection of people to come together to solve these problems. And I'm grateful that you took the time to build the kinds of solutions that these issues require. A lot of us build products for consumers, and we always start with what's a problem we can solve for people. Is the experience great? Will they pay? How will they pay? But we don't often build our products and say, let's put the consumer at the center of making sure that we also do no harm. And you are just taking great product design to an entirely different level. A lot of different teams here did a lot of incredible work, whether it's catching risks at the start of a transaction. As a person taking care of 2 aging parents, one my wife's and one my father, you are consistently worried about scams and how incredibly sophisticated they've gotten now and whether they will be ripped off all the time. You started with great work on helping consumers map their data permissions before they click agree, or making fraud redress transparent so a consumer who's just been hit with fraud knows where to go and what's happening on their case. Putting consumers in the driver's seat about what information companies keep about them, helping consumers verify who they're actually dealing with on the lender side before money moves. All across this sprint, you've been doing incredible work to address these real issues and real harms that consumers face. And I think one theme that comes out is when I was a kid, my pediatrician always said prevention is better than how hard it is to cure something. And I think the theme that's coming out is that we are asking consumers to take on too much after something bad has happened. Too much deciphering, too much guessing, too much recovery, too much burden. We're putting all this burden on consumers to try to fix the harm that's been done. And what I really value about what you're doing is you're working to prevent it in the first place. What you all did is a real step towards not only making extraordinary consumer products, but thinking about the negative repercussions from products as well and how you prevent that. And you heard from consumers when you started a problem. You've heard some of the rawness of trying to get help after a Cash App scam, or about not knowing who bought or sold your data and how that might actually change what products consumers even use. We've heard people come in saying that they've had positive experiences with digital finance, and they walked out questioning their experience and the products they use because you all are asking the right questions. What stays with me from all of this is that consumers shaped the work while there was still time to make the products better. And that proves something really important, that consumer protection and innovation can go hand in hand, and they're certainly not opposites. So when you all came together and put consumers and builders, industry voices, researchers, advocates, regulators in the same room with a real problem and a short clock, which Delicia tried to extend for you but couldn't, you got really practical and you developed very testable ideas quickly. You got solutions shaped by real conditions, not ideal conditions, and you get to a different model for how this work can happen. Not just building things for consumers, but building with consumers to prevent harm. If anyone asks what it looks like to show up differently for consumers, this is it. This is the answer. You are the answer. So now the job is to move forward. This isn't like Vegas, where everything that happens in Vegas stays in Vegas. This is Atlanta. This is where we need you to carry this out of the room. These ideas, this way of working needs to travel into product decisions, into design choices, into clearer standards, into safer systems. So I just want to end with thanking you. To everybody here who built or who advised or who judged or tested or gave comments or feedback, to the consumers who shared their experience, challenged assumptions, told the truth about where the system is breaking, where it's hurting people, thank you. To our partners and funders who back something ambitious enough to be useful, thank you. And to Craig Newmark for helping set the tone from the start, thank you. The real test is not what happened in this room. The real test is someone facing a scam with a clearer path to recovery. Whether someone experiences more transparency, control of their personal data moving forward. Whether products are designed to protect people instead of pushing risk and recovery back onto the consumer. That's our work ahead. That's what you've been leading on today. Thank you all.
Thank you so much, Phil. All right, we are now at the hour. I'm going to invite Red to come on back up.
Thank you. This is where I will not be funny because this is when it's awesome. And again, y'all all did a fantastic job, but we have 3 winners in my hand up here. And as I say the company name, please come on up. We've got some fantastic awards for you. And here we go. Are y'all ready? Drum roll. I love the drum roll. First up, excellence in responsible design. We have First Call. Woo! He was surprised. Come on up. I think we need the Bob Barker music. Dun, 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 dun. Come on down.
We're missing half our team.
Half the team. First Call. And if they don't want them, I'll just take those. All right. Second team, Consumer Impact Award. Drum roll, please. My Data, My Choice. Woo! And now, for the moment you've all been waiting for, the overall winner of the day. Wow. Drum roll, please. Canary! Wow, did my voice just spark that? Is it like Alexa? I don't know. Have the same playlist at home.
Are we all holding? All right. We like each other.
Thank you.
I do have to say, though, the one thing I didn't like your presentation, it said if it's red, it's maybe a scam. So I was like, I don't know. I was like, not me. If it's me, it may be a ham, but that's a different story. Let's give everybody another round of applause. Again, y'all did a fantastic job. Fantastic job. But y'all really shine, so thank you.
Thank you so much, Red. Teams, congratulations. It's great to see this all come together. Well, we have had, what a great afternoon. I'm really, really impressed and just proud of all of the product ideas and presentation. And so one more time to all 5 teams. Every one of you walked into this room a couple of days ago. You didn't know each other. You don't work in the same industries, fields. We have academics, consumer orgs, different kinds of industry orgs coming together to solve for the consumers and the consumers at the table. So thank you. This is a huge win, as Phil mentioned, right? This is a very different approach, and maybe it's the way forward. Thank you also to everyone joining us online. Thank you for trusting us with your time. And thank you for being part of this first tech sprint. The concepts you saw today will be shared publicly in the weeks ahead. We will have a brief that talks about this work in a broader context and what's next. And let's hope the conversation doesn't end here. It's just a start. Thank you again for joining us, and have a great day. That's a wrap. Thank you, everyone.